There is no question that the dollar is losing influence around the world, but in recent years we are seeing a hastening of the dollar's demise, essentially dying a slow and painful death at an accelerated rate. And that is being caused by gold. There's another factor involved in all of this, and I'm going to explain what it is in this video as we explore. There is a guarantee in life, for sure. Since the dollar's inception in its current form on December the 23rd, 1913, the dollar has done nothing but lose value. Folks, that's inflation, and that is a constant. Even if it gets under control, that inflation is 2%. But its influence is really what has kept the dollar propped up all these years. But that is changing. It's called de-dollarization. We know that it's been accelerating, and that acceleration has also led to the decline of the dollar's value and influence, but also the increase in the influence of gold. And that is certainly evident with central banks around the world. I'm going to be referencing a piece here from a think tank called the Official Monetary and Financial Institutions Forum that has an article about what the dollar is doing compared to gold and how its influence is decreasing because central banks are turning to gold rather than the dollar these days. And a year must feel like a decade for public investors. And in 2024, the annual Global Public Investor Survey showed that the dollar was the most in-demand currency for reserve managers. Having recouped earlier losses, many were also willing to add risk to their portfolios. Now, a year later, and the script essentially has flipped, now there are growing questions over the dollar's dominance in portfolios, and public investors are seeking safe haven assets. The OMFIF's Global Public Investor has tracked central bank reserve managers' investment strategies since its inception in 2014. The first public edition of the report. They say that diversification into different sectoral and geographical categories is increasing, owing to suboptimal returns from traditional currencies and instruments in a low interest rate environment. Now, for these central banks, particularly those with growing reserves, there was appetite to move into higher yielding currencies and riskier asset classes such as corporate bonds or equities. Some official managers have reduced gold holdings to generate more balanced portfolios, adding that others are increasing gold weighting for the same reason. So, over a decade later, this year's GPI report, based off of a survey of 75 central banks, shows the appetite for diversification continues, but for very different reasons. The foundations of the global economic order, underpinned by globalization and the dollar, are shaking. But gold is not shaking. In fact, it's increasing. My friends over at Summit Metals, well, they know. They also hold gold themselves, and they sell it. So check them out at summitmetals.com for competitive pricing and great service over at Summit Metals. Now, what we're seeing here is these foundations, the global economic order, and everything changing with this de-dollarization and what's happening. Everything is changing. Protectionism, geopolitical tensions, and volatile policy making are becoming the norm. In this environment, close to 60% of surveyed central banks are seeking to diversify their portfolios within the next 2 years. This is primarily for risk management and resilience purposes beyond bolstering returns. So this survey was done from March to May of this year. Now, a lot has happened since March and May. You know, it's amazing how quickly things are moving. But notwithstanding, a lot of the same factors are still at play right now, a month later. It's not a temporary consideration. Over 80% of reserve managers have geopolitics in their top 3 factors shaping longer-term investment decisions ahead of inflation, real interest rates, and technological change. When you look at the diversification, most of them definitely want to be able to have to do that. as well as having an increase in the size of reserves and also liquidity. But risk, they're not willing to take on. They're lowering their risk portfolio there. Reserve managers expect to move away from dollars towards other currencies, especially the euro and renminbi. Now, that is a pretty shocking thing for sure. Very alarming to a degree. When you got the dollar here losing its influence of the other currencies, you may understand it for gold, but other currencies, it's crazy. Wow. The dollar was the only currency that saw demand fall this year. While a net 16% of the survey respondents intended to add to their euro holdings over the next 2 years, up from 7% last year. However, this preference is not across the board, with respondents from emerging markets more likely to add to their renminbi holdings. Gold is shining brightest as a diversifier, and I'm going to tell you about how gold can help you as well in many different ways here in the United States and beyond. And you don't have to buy coins like this as well either, because there's a trend happening here in the United States. Stay tuned for that. But a dedicated In Focus section reveals that precious metal is the most demanded asset class for central banks, with 32% of central banks expecting an increase in their holdings for the short term. Meanwhile, the shift towards corporate bonds and equities is likely to materialize over the next decade rather than the next few years. So that is the case. Central banks looking more towards their gold holdings. Makes sense. They've been accumulating a lot of it since 2022. But you and I also can accumulate gold, not only in coin form like this here. We can be our own central banks, but we can also transact in it. And that's where the Goldback comes in. And I'm telling you what, folks, the Goldback is quite something because it has an exchange rate. This exchange rate is really the key and the foundation to what makes the Goldback work. And because what it is states where these Goldbacks are issued, they have a number of different organizations and companies that use them. And I think that's wonderful and great. Even in its most saturated state, Utah, it's still a very small amount of businesses. But nonetheless, the fact that it's available in such form like this, a 1/1000th of a troy ounce, this is worth $6.66. It has doubled in its worth according to the exchange rate. But the key is to honor this exchange rate. And most businesses that do accept Goldbacks do just that. And so there's ways to carry Goldbacks. They used to have this big wallet, which can hold all the denominations. I assume they still have it. But, you can get it and carry it around with you. But it is a little bit cumbersome if you want to carry all the denominations. And for most of us, to carry a 10th ounce or a 20th of an ounce of gold, such as this 50 Goldback here, is going to be a little bit cumbersome for these. But more likely, that's still a lot of money to have a 20th of an ounce of gold for most of the everyday transactions. You're likely not going to use that as often or as much. So what you want to do is you want to get some of the smaller denominations, ones that essentially will fit really in a bill like this. That's exactly the same height as a dollar bill, as a currency. So that's really really ingenious that the Goldback people did that. They have now this new wallet, which has just been released for sale. And this is a pretty amazing product here because this will fit in most pockets. And this Wayfarer wallet is what it's called, is a premium Goldback wallet designed essentially for everyday carry. Made in the United States, hand-stitched and crafted from full-grain bridal leather. It's built to withstand a lifetime of use. Essentially, it's a phone-sized wallet that fits comfortably in your pocket, and it is an essential accessory for those who carry real spendable gold, and that's really what it's about. It's a full-grain, 6 ounces of leather, and you can see here, very, very nice. And I love the smell of leather, too. It's terrific. And there's other places where you can stick business cards and more Goldbacks and even cash if you want to. You can stick it all in here. In fact, in here we've got all the different denominations that fit in it. The half ounce, or the 1/2 Goldback, the 1 Goldback, the 2, which these half ounce or half and 2 Goldbacks are the new denominations for Florida, and then the 5 Goldback as well. So those are the denominations that fit in there, and for most everyday needs, those are the denominations you're likely going to use rather than the larger ones. All of these are smaller than actual currency. Same width, but actually smaller. Easier to carry than actual cash, which is pretty nice. Now, there's other things about this wallet, which is, I think, is just pretty amazing. You know, high-quality leather develops a unique patina, picking up the oils from your hands and the elements around you. It's a natural aging process that gives you the wallet a rich, one-of-a-kind look. And like the Goldbacks inside it, the wallet gets better with time. And you know, when Goldbacks have doubled in their transaction value, that tells you that they have preserved certainly their value compared to the loss of the value of the dollar. But again, these Goldbacks are not for stacking, really. Yes, you can collect them, but you're going to pay a very high premium for them whenever you do collect them. But one thing I do like about it, as you see here, this is the Goldback UV light, and it shows you the special, very special security features that they've added with these Florida Goldbacks. You can see there it lights up, and you can see the 1/2 AU show up right there with the black light. Really, really cool that it does that. We're going to go through each one of these. Here's the one, the Goldback logo and the AU under the black light. Here's the two. So they're continuing to really enhance the features of these Goldbacks. It's just amazing. Really well done by the Goldback people. And you're really paying no more for that. And they were very kind to send this wallet to me and these Goldbacks and this light to demonstrate this to you. But I'm going to post a link to the Goldback website down below where you can learn more about the wallet. And we're going to continue on here, and I'm going to discuss a little bit more what's going on with with gold and central banks. You know, the dollar's reserve currency status is not yet under threat. Over 80% of central banks stated that the dollar still provides safety and liquidity, and the vast majority expects it to constitute over 50% of global reserves over the next decade. Right now, last time I checked, it was about 57 to 58% of global reserves. So it's falling. It's crazy. And but you know, it's pretty remarkable when we see that this report incorporates insights from a short poll of public pension and sovereign funds to understand how both groups of public investors and collectively responsible to new pressures. The views from public funds paint a similar picture, more hesitance on U.S. investments and less willingness to add risk on portfolios. So that's what they're doing, and it's pretty amazing to see this report from the think tank, essentially, that looks at this stuff pretty closely and see that trend emerging. But you know what? Trends or no trends, gold has always been a stable store of value, no matter what form it's in, and that is not going to change. Let me know what your thoughts are in the comment section down below. I hope you found this video informative, insightful, and educational. Would like to extend a multitude of gratitude to you all for watching and encourage you to please rate, share, comment, and subscribe.